Now for the next session, from energy innovation, we now turn our attention to climate risk and resilience. We are joined by Jonathan Rake, CEO of Risk Data Solutions at Swiss Re. Jonathan is a 2014 World Economic Forum Young Global Leader with deep experience across the insurance sector. Jonathan will share insights on evolving financial and physical risk and how businesses can proactively adapt to a changing climate. Moderating this discussion will be Karina Litvack, Ambassador and founding chairperson of the Climate Governance Initiative, CGI. Let's welcome Jonathan Rake and Karina Litvack.
Thank you. Thank you very much. Welcome, everybody. Welcome, Jonathan. It's such an honor to share this panel with you. Let's dive right in because we have a really full agenda, with apologies to Jonathan, because I think I'm going to flood him with questions. So let's start right away. You're a 17-year...
Firstly, good afternoon, and I hope everyone's had a good conference. I'm dialing in from Zurich, so it's still morning my time. But yes, Karina, let's get right to it.
Okay, great. So you're a 17-year veteran of working in Asia, and you've noted that contrary to here in Europe, where much is driven by regulation in the EU, that is simply not the case in the Asian region. So how would you describe your responsibilities as a company in engaging with clients and stakeholders, given this very different regulatory environment? And so what role do you see for government playing and driving action in the industry? And including what pitfalls you see?
Yeah, sure. So I think firstly, your first part of the question, you're asking about what role do we play? And ultimately, our role of course, is influenced by governments and regulation in terms of ensuring that we adhere to regulations. We also obviously contribute a lot towards papers and positioning documents and all the rest. And we have government arm within our organization that engages with various governments. So that's important, that influences the agenda. But of course, our kind of purpose and which at its core is about making the world more resilient, that doesn't change. And so we do try and certainly operate in a globally consistent way. We have many of our clients, because we focus on the P&C side, certainly in many cases large multinational institutions, that consistency in the way that you approach things is very important, and certainly on this topic. So regulation influences, but doesn't really sort of deter or differentiate in what we're trying to do as at the core of our company. I think what we see with EU, obviously, with regulation, that has obviously driven a lot of awareness by the requirement of reporting. And that's quite a big change, because what we see is companies needing to first and foremost understand their risk profiles. They need to understand their data and improve their data on various topics in order to obviously then be able to comply with regulation on some of the reporting side. So that kind of advances or speeds up, accelerates, should I say, the awareness phase, and that obviously makes it beneficial for us as an organization to then partner with some of these companies and help them in that process. I see, of course, in Asia, we're talking about many different countries and regulators and governments, but many are certainly a lot more proactive on the broader topic around climate. And it might not be that it manifests itself in terms of very specific regulation, but these discussions, as we are here today, are happening across many countries, and also a lot of learnings between different regions. Now, different governments will come in and have different perspectives on these things, but ultimately what we see is a lot of the specifically multinationals. These are important considerations, because some of the impacts of these changes are obviously impacting their business already, and so they're getting on top of that. So it's not just regulation. The governments need to obviously provide the frameworks, but they also, I would say, really need to engage the public sector, the private sector, to understand, have a deeper understanding for how their businesses are being impacted and what they're doing to build resilience. And I think that's important, and super to see that we are embarking on that in Malaysia.
Okay, well, I mean, you touched on data, so let me skip right to that, because that's obviously a very crucial point. And without wanting to put too fine a point on it, The insurance sector in some parts of the world, and I don't know enough about Asia to know whether that's the case too, has been criticized. So on the one hand, you have excellent modeling, really leading in terms of the private sector on risk, but also the ability to incorporate some of the latest forward-looking, projections, even though they do contain obviously more uncertainty than looking backwards. But at the same time, some of these data are not necessarily always accessible. So could you comment a little bit on accessibility and the role that you see the industry playing and your company playing in enhancing the ability of industry to get its head around the level of risk to which we are all collectively exposed, particularly in respect of adaptation, but also mitigation and how those two interact?
I mean, this is a very important point, and what I would say firstly is the hunger for data and insights from practitioners in our industry, in the insurance and reinsurance industry, but also from clients and from the public sector partnerships is very high, because we see obviously the value that you get from improving your models and capabilities, and companies really understanding that they've got to have support, but also clients need support to have a better understanding of those risk profiles. What that's also doing is stimulating a lot of partnerships and a different way of thinking about data sharing. And so a lot of what we're talking about now is interoperability of our environment, our data, our platforms, and how that can be supporting working in different environments that actually provides access and data, and everyone sort of benefits and advances. That's a topic that's significantly increasing and a theme that's increasing. We recently had a big industry event in Monte Carlo, which is RVS, a Rendezvous September. And, talking about in our business, this theme of, sharing intelligence and integrated intelligence. I haven't seen those conversations to that level in the past, meaning an openness to provide and access different data sets to enrich the environment. And what we actually see, for example, in the insurance space, and many of our clients, of course, from a reinsurance side, are insurance companies. They start thinking about getting multiple different models and scenarios, because that's ultimately going to improve their understanding. Now, how the data and the insights, to your point, your more specific point, gets to the risk taker or the risk offsetter, the client, the individual, that really depends on it's very much can differ across countries, locations, corporations, but certainly what we have an intent to is more sharing and more partnerships where you can actually make that more accessible. And we've got some really good examples of some of these. And actually, what we do see in some cases is it can be the government itself that's really driving that. And I'll share one because it is quite public example. Public Safety Canada PSC is a partner a government partner that we've worked with, and really what they wanted to do is have flood data. Flood, obviously a huge secondary peril, a major driver of catastrophes globally. They wanted to provide this and have this information accessible to the public on a very vast scale, so that everyone can better understand what's the sort of leading science around some of this risk and how is that impacting their decisions. And so we actually worked in partnership with a major multinational broking company and brought our capabilities to fore in terms of actually developing a platform that then could provide this flood data and flood hazard data to the public. That's a great example of everyone working together to get access for information. I think, Karina, we have acquired a company called Fathom, which is a leading company in flood hazard and terrain data, really experts in this field. So it was our partnership with Fathom specifically, and then bringing our portal capabilities, etc., to the fore. So that's a great example. There are, of course, other examples which might not be to the benefit of the ultimate client and ultimate user case, but I do see that sort of information sharing everyone raises the bar of understanding is a much stronger theme these days, and that's great to see. And I think we would just always be encouraging to head in that direction.
Well, do you anticipate a point at which access to data, and more importantly, the ability to interpret and feed it into major capital investment decisions, is going to enable the ultimate users to position themselves for greater resilience? Because at the moment, the focus seems to be on mitigating risk, diluting risk, diversifying, and so forth. At least this is my non-expert, understanding as a consumer. I sit in boards. I'm in the audit committee. We look at these, what's available to us as a company. And I know that our audience is made up of board members like myself, who, for the most part, don't serve in the insurance sector. Some do, and therefore, how is your work going to enable us to make smarter decisions ultimately? So we're not just responding to risks and then, easing the pain by collecting on our policy coverage, but actually making wiser decisions for the long term.
Yeah, so I think firstly, maybe to sort of bring some context to it, just because I know we've got attendees from different industries and different backgrounds. If we think, before we think about how we support the wider, and you just think about how the businesses of insurance and reinsurance are impacted by climate topics, and then I can sort of frame that a little bit as a starting point, and I would share, not to go into great depth. We obviously, as an organization and representing the industry, have a life and health side to our business and a P&C side. And actually, for insurers and reinsurance, climate is a huge topic across both those lenses. I'll touch on a few points around that. First, if we think about both the life and non-life, I'll take a topic here which is very topical in Europe: heat waves. So heat waves actually can have an impact on your life and health insurance business on both sides of the coin. And for example, they can increase mortality if you've got heat waves impacting term life products, for example. We've seen a number of governments in Europe actually being very proactive with taking action around particularly vulnerable classes like the elderly, etc. So mortality would be impacted with increased heat waves. However, if we went towards scenarios in certain countries where there's more moderate temperatures, well, that could, of course, increase longevity. So that impacts your annuity business. So the starting point, and on the P&C side, I think those are probably more well understood, because there we're talking about property exposure, and that can be to many of the events that we see with regards to natural catastrophes, hurricanes, floods, droughts. How is this impacting your portfolio in terms of your actual fixed assets? So the key thing to state at the beginning is we've got to understand how these themes and topics are actually impacting our own business and our own industry, and get on top of that. But once we have, what we're able to do is then help bring those capabilities and that understanding to the benefit of our clients. And our clients can be insurance companies and corporates. They can be individuals through different portfolios. But ultimately, what we have been trying to do is actually bring that capability, that science, that knowledge to the bear. And an example of that would, of course, be what we've done around working with businesses. So we effectively say we turn ourselves inside out by getting a standardized data set within our company and a standard data platform. We are actually able to bring clients' data into our environment in an unstructured way. We structure that, and then we provide our very robust digital assets onto that portfolio of data. So this would be things like risk models across a number of variety of risks. That effectively is helping clients have a much better understanding of their own risk as it is today, their portfolio, as well as how that's responding to some of these trends in the future. And so that's an example of actually utilizing our understanding of how our businesses impact our capabilities. Because if we just take the climate topic, for example, a company like Swiss Re would have been acquiring climate science for some of the sort of best institutions for many, many years. But the secret sauce really is when we combine that with our ability to actually produce models, probabilistic modeling, and determine what that means in terms of sensitivity analysis for assets, and et cetera, et cetera. So what we see as a starting point is let's see how we can use our data and tools and capabilities to help others have a much better understanding of their risk as it is today and in the future. How that then passes through the system requires different partnerships and, working with governments and aggregating of risk and risk data. And the example that I gave in Canada is not the only one. There are a number of these where we're working with different institutions, in many cases with governments as well, to bring that data and capabilities to a wider set of constituents, not just large multinationals.
Right. And you cite the example of Canada, obviously I'm from Canada, very developed country where insurance coverage is compulsory in many cases in order to proceed with whatever various different services. That's not the case in other parts of the world. And so we are dealing with significant protection gaps in many parts.
Yeah.
And I know we have a question from the audience on that very issue. The Asian region is vulnerable to that. Can you comment on that particular challenge and the role that you see the industry playing?
Sure, and just so everyone knows, the protection gap and what we're talking about there obviously is the gap between the losses that occur from certain events and what is obviously to what extent that is picked up and covered by insurance and such vehicles. And it is certainly more pronounced in Asia than it is in some of the other Western sort of countries, and where actually in many cases where financial and insurance markets are more developed. And the key thing here, just to answer that question, is to understand how does it help? Well, of course, reinsurers and insurers can provide financial stability, particularly when recovering after a disaster event. And so there's two sides of this equation of where we can help. One is obviously mitigating, and haven't talked about that yet. But this is really in the example of the recovery event, and the one that often gets the headlines is the example of earthquakes around 2010 and 11. The first was Haiti, and the second was Christchurch that gets referenced. Haiti, we saw what happened. They had extremely low insurance support. The country had to take that up, and there was a massive, massive challenge for years and years to come, because ultimately, when you don't have that protection, who pays? It's the individuals in the country. Foreign aid can help out, but effectively, it's taxes going up, it's government recoveries, it's the individuals. And when you have a low-income location impacted by severe events, Christchurch was a very different story. A lot of that insurance bill was picked up through their earthquake insurance schemes. Actually, London market, the insurance market of London picked up a very large bill because they had these global insurance and reinsurance structures and support. And so that's really what we do try and promote is the value of insurance, and also really understanding that, and certainly in widespread damage and peak scenario events, it's critical. So our role is to ensure that we're not trying to enforce insurance on anyone, but that we really are promoting the value. And that's why we're one of the companies that actually has a very significant public sector arm as well, because it's also about working with governments. And what we do find is that can be quite challenging, because governments will change and budgets will change. And so the value of the products and our role is to really be very clear in explaining how these products work, why they add value, and how they can help with resilience in societies and for broader sort of economic recovery and progress is really key. So protection gap is a real challenge in Asia. It's just not Swiss Re's role to just fix it alone. We need to work with others, but a lot of it is about actually promoting awareness on the value of our capabilities and products and solutions.
But is it just, again, forgive my naive question, but is it about conveying the importance of having insurance coverage, or does it go that next step, which is to say, don't build here or don't build this way, so that your insurance premiums will be much, much lower, or we may not provide you with coverage unless you build here rather than there, and this way rather than that way? It's really that thinking ahead so that we're not in the position of having to make a claim because the building collapsed, whether it be from an earthquake or a flood or whatever, right?
Yeah, so now you start to go to the other side of the coin, which is not the rehabilitation, it's the mitigation. And
Right.
I guess the unfortunate truth about that is, and I know numbers quoted actually by the Asia Development Bank in the past said that $1 out of every $10 gets spent on on mitigation, none on recovery, and that's probably improved, right? There's a lot of talk and focus around business resilience and mitigation, and that's getting a lot of attention, but still the bulk of the focus and many different cases and structures and investments and all the rest still goes to recovery. So mitigation is such an important topic. It is for us to bring our expertise and also with partners, others to help influence that. I think what we see is a lot of this happens only in reinstatement, especially if we're talking about things like natural catastrophes. That's too late, but it helps you for the next one. So buildings getting rebuilt in a different way that are more, resilient to fires if you're in a, high risk fire zone or flooding accordingly. So the proactiveness of that is still a challenge, but we do see a lot of the reinstatement stuff is really being done, in climate resilient in a very different way. There's obviously a lot of proactive work done recently sitting in mountains, helping with building flood avalanche defenses, and you see a lot of these programs. I think the point that I would share there is it's often a very localized topic, and the example I have is triggered by your comment around the building codes and building topic. In a former organization, we worked with Red Cross Red Crescent in Indonesia. It was particularly looking at flooding of Jakarta, and the issue was Yogyakarta and higher up the river system into Jakarta. A lot of the practices along those river systems and the silting and all the rest that was coming with that was effectively causing widespread flooding in Jakarta. This is going back quite some time. So we said, okay, well, at this company, we've got a ton of expertise from the Gulf of Mexico flooding and from river systems when big storms and big events come through. And we've got risk engineers who have worked a lot on building codes and building practices. And the reason why I say it's a very local thing and you can't always just take a practice in one country to another, one of the things that was getting advised at the time was we said, okay, what they do around some of those parts of Gulf of Mexico and a lot of those coastal areas is they actually build stilts, build buildings up a level and build stilts and raise it a level. Well, when this was assessed and tested, in this case on the upper Jakarta river systems, it effectively meant that it was creating another roof. People could actually use that as a shelter to actually live under. So you've got to think about demographics. You've got to think about income disparity. You've got to, and that always resonated with me. You can't just take something that works in country A and just force the practice in B. So the local activation has to be done with strong partnerships of people who actually understand the local cultural norms, the fundamental local issues, and that's why a big part of the sort of building resilience piece and where we need to really get better is around ensuring that these partnerships are set out where the right expertise comes together. The objectives are set very clearly at the beginning. I think you see a lot of public-private partnerships that miss that, or maybe not, the objectives are not aligned, or people's roles and responsibilities are not clear, or these things drag on, they don't have clear deliverables. There needs to be an improvement. We've actually been having conversations with the UNDR, UN Disaster Resilience, about exactly that. They're really trying to set up a sort of CRO function within the UN to actually help address this fundamental issue around ensuring that there's stronger and clearer alignment and more successful partnerships. So it's part of our role for sure. We do it. The insurance industry has a lot of activation. I think the fundamental point is it needs to be in partnership, and it needs to be a very local topic as well.
So then taking that to the micro level of those of us who are sitting around the boardroom table, right?
Yes.
Typically we will just sort of poke our nose in for a millisecond to say, have we paid all of our insurance premiums, or is everything under control? Yeah. But in actual fact, if I'm hearing you properly, we should be asking much more searching questions along the lines of, have we brought in the right type of expertise to advise us on whether we have taken the appropriate preemptive measures? And if we operate a great deal of physical infrastructure, how exposed is that in light of what's happened in the past, but in light of what is potentially going to happen in the future? And then second question, and I told you of a little incident, very big incident that affected one of my former companies, which was a oil and gas company that operated, among many others, a refinery. All of the necessary sort of preparations had been put in place so as to protect the facility in the event of a severe flood. That severe flood did happen. We stayed bone dry, but the city got very badly flooded, and the city insisted that we take down our protective walls and allow the floodwaters to run into our silos, thereby destroying all of the mitigation measures that we had put in place, and we were not insured for the repairs to the damage that we had willfully caused at the instruction of the mayor. And really the lesson learned there was it's not enough for us as a company to take preemptive measures that cover the perimeter of our operations when we exist in a hydrological basin that has not been properly protected. So where do you see, I guess my question is twofold, really. It's two-pronged. One is, we in the boardroom, what advice should we be seeking from the insurance sector? And how can the insurance sector help us by ensuring that those partnerships are delivering the answers that we need so that we don't find ourselves caught out in these, quite horrific situations?
So very good questions. I'll start with your first one and try and sort of just make it pragmatic and memorable to, what questions to ask and why. So I think if I think about maybe three questions that as board members you could think about, the first is to say, not just what is the risk today, because you'll get a risk register. You should ask the question about how are these risks evolving? And that can be related to things like disaster resilience, supply chain risks, or climate, of course. So how are they evolving? Do we have a good understanding, or at least some data points around how these risks are seen to be evolving and why? The second thing I would say to think about as a board member would be, how are we using data and risk insights? How are these insights shared with the board? And how robust are they? Because quality of data is very important, but also an understanding of shortcomings. So we don't make sort of very strategic decisions based on perspectives or informed data. So really think about data and risk insights and how that's shared with the board, and where these insights are coming from and how they're used. And then I think a third thing is really to be on top of what's the role of risk management within the organization. How prominent is it with a seat at the table, and how much influence does that function within this organization have? Because it's often through the risk management function, especially if you're on bigger companies, that's almost more challenging at smaller companies. There, I might say it might be the finance or treasury department. You've got to think about asking that question. But do they have influence? Because we don't want the scenario where they speak up, but there's no platform, and therefore that's going to cost a little bit of money. We're not interested. Gets railroaded, as opposed to, no, these important topics in the risk management function. So how are the risks evolving? How do data and risk insights get to the board? How robust are they? And what's really the empowerment level and role of risk management? And so those would be three things on the first question. I think that the companies face diverse risks in the climate environment. It's clear. And so the boardroom questions focusing on informed discussions about them. And also, on the flip side of that, what could be presented to the board, or what they want to probably hear about, is also let's hear about these examples of how these risks are manifesting, and what other companies are doing to address them. You've just had in Asia, Typhoon Regasa, second typhoon signal 10 and hitting Hong Kong, category 5. There's other recent flood events in Sabah and in East Malaysia I'm aware of. And so these events are happening. So we should have conversations about this, and how our business resilient plans responding to them, be more informed around the scenarios and events. I think that's important. Then to get to your second point, this is a really tricky one, because that is such a challenging situation. But I think in Asia, what I recall from my time there is actually, in many cases, the way that some of these countries work is some of these big conglomerate multinational companies are actually involved a lot in the activation. I just think about some of those major clients that we had in Philippines, for example, the government would actually rely on them or engage them for disaster response activation. In some cases, they almost had a whole capability built in their team. Their contribution towards society was helping when Typhoon 4 or 5 has large
Mm-hmm.
tracts of land and impacted their capabilities, but also so there's this inherent sort of reliance and alignment and that sort of does exist almost as a starting point. But I think what's key is to do scenario testing. And I give you an example. You talked about flood. So one of the things that I was mentioning with FUD and what we're able to do with some of those capabilities is you can actually, it's not just, we say it's good to know if we're talking about, let's say, peripheral flood. So if it's good to know the river system and what scenarios could happen under certain rainfall levels, how that would impact. If our business location or asset is 20 kilometers away, what we also want to know is what's being built in between in terms of flood defenses and other things. So actually understanding terrain changes and all the rest. So there is data and insights that you can really have more robust scenario testing around some of these things. And in this event, is this going to happen? And what has been done around building defenses or just natural defenses that have been built by things like buildings getting erected in the meantime. So the data and the science is getting a lot smarter around this to actually improve the sensitivity testing and scenario testing. It might not be perfect and you're going to get these isolated cases, but that whole sort of context around it's not just good enough for ourselves or others, that also is you're more vulnerable in certain locations than what you are on others. And that's why as a starting point, actually having a deeper understanding of the risks when you're going into those locations or operating in those locations, you need to put more attention onto certain locations where maybe certain risks are high. In some cases, the risk of expropriation of your assets is going to be higher than other countries. In others, the risk of non-protected flooding is going to be higher. In others, the supply chain is going to be an issue because it's very rural locations. And so really having a holistic view of risk and not just thinking that we're going to apply one size fits all, that's important for the board to know as well. You should know where your hotspots are and what's being done to scenario test and make that more robust.
That's absolutely correct. And I do think, though, however, that, when you're sitting in the boardroom, that the company has a deep history of assessing political risk, particularly if it's in certain industry sectors that operate in, areas that have high levels of civil conflict or political instability and so forth. So that's the uncertainty is built into the model, and we know how that, like political risk, we know.
Yeah.
Supply chain risk is also a known unknown, right?
Yeah.
There are a number of these where we've been around the block enough times that we know how to model it. The catch with climate is that we can't go by what happened before.
Yeah.
And we're all operating to some degree with blindfolds on. And so I think we all think, well, someone else is thinking about it. Someone else knows better than we do how to do it. And we're just going to respond, to the signals that we are given in terms of pricing or terms. And I'm not sure, and this is really where I think we as board directors could learn to do a better job. I'm not sure we're asking the right questions to ensure that our companies are asking the right questions of their insurers. Because by the time, my worry is that by the time we find out that we have to do things differently, it's too late. We've already built in a particular location in a particular way. Or it may be that, we've had a facility for 60 years in a given location, but the world around us has changed for the worse because of, whether it's in the case of climate, which is today's topic, increased flooding risk, et cetera, et cetera. So, again, what is our role ultimately? How can we do a better job?
Yeah, and so look, I think what we do have is data around developments more recently and how the trend of exposure and losses is changing quite significantly. So from that, of course, you can take scenarios and there's enough data of the trending to actually extrapolate scenarios for how the future. So it might not be that we can say, Japan's going to have a very large earthquake in 2042, but we'll know we can start to see what are the likelihood of multiple events or bigger events, and certain perils that's going to be easier to do than others over this period. So you're not going to get accuracy to the day, in some cases not the year, but you are going to get a loss view that significantly or scenario view that changes and that you can work towards mitigating and also thinking about your portfolio. So it's really based on, like, if we just take 2024, 137, I think was the number, billion US dollars insured nat cat losses. It's the fifth year above 100 billion. Well, we know that part of that is also because of the increase in asset values
Yep.
or the more buildings in certain areas. But a significant part is the increase in perils, specifically second perils. We saw that with the wildfire, right? 40 billion on California wildfire. Those events weren't predicted to be happening. Now you start seeing models getting updated, more and more models back testing, and you can see actually we see that these things can start happening because wind speeds are higher and temperatures are higher, etc. I was in a very interesting session the other day in this part of the world, and there were certain locations that in the last 10 years, it's two plus degrees warmer. It's not 1 degree, and what that does in terms of that exponential effect and atmospheric changes and all the rest. So we've got these changes that are recent enough in the last couple of decades that you can work the science with and actually take views on changes going forward. That's enough. So I think that's where you don't need to be the expert on the board. They're not expecting you to suddenly become a climate expert. What you want to be making sure is that the management team is doing what they can with the resources that they've got to have as robust an understanding of their risk profile and how that's evolving with these changing risks based on quality, science, and modeling capabilities. And recognizing that's going to have gaps, but at least with the resources that are deployed to that management team, that they're taking this extremely seriously and that they are making decisions, not just looking at the data and going, that's interesting, but that is influencing their decisions from a protect the company for the long term. We need to stay around for a long term. So I think that's really the role, is to ask the right questions around where are you getting your data? How are you managing to overlay that with your profile, and how is this as I said, what's the role of risk management empowerment in the company or whatever the department is that these conversations take place, and it's not just data that sort of stops at a point in time low down in the organization. That's really the intent, and we see it from our industry perspective. We see a significant increase in or improvement, should I say, in the understanding of the topic and the robustness of the conversations that are having in corporations, but it's not everywhere, and it's not at every segment level, right? Your startup or your SME or your mid-corp might not have the sophistication. So, and interestingly, if you're in the sharp end of global financial services, specifically say banking, there are experts sitting internally who are assessing your risk models, who have come from expert risk modeling companies themselves. And these experts are also being hired into the regulators. So the whole ecosystem is becoming, in certain pockets, really deep expertise in terms of asking those right questions. So as a board, you need to make sure that the management team is fulfilling their role of looking at the sustainability of your business and also thinking about some of those social contexts of the topic that you have obviously been bringing through in some of the questions. And that's really an important role of the board. And when you spot something or the answers aren't right, that's when you can really jump in and go deeper, and then call on the experts.
So you've just alluded to the financial sector having in-house experts that look at these questions and that move back and forth between finance and regulatory sectors.
Yeah.
To what extent are you seeing lenders of various types, because we have a whole constellation of different types of lenders, right? Incorporating these principles in a forward-looking way. In other words, I remember discussing with my colleagues at Climate Governance Malaysia that house building was going on at a great pace in flood zones. And we were seeing increased costs associated with landslides. And yet houses are still going up in these areas. And it really makes me wonder, who's financing these homes? And if the larger banks have the good sense to refrain from, issuing mortgages on these high risk properties is someone else jumping in to fill the breach, and therefore those houses are still being built by and financed by organizations that are perhaps less, have less deep capital, but that are adding to the instability of the financial system because they're growing their exposure to these, frankly, inappropriate constructions.
So I can't obviously speak for the lender community, but I'll just give you some examples of how this plays out. Very good example. I was in a meeting in the last 2 weeks, actually. Topic was all around flood in Hong Kong, very topical. Then suddenly we have a major event.
Mm-hmm.
And I saw very much firsthand the robustness around this topic from the banking sector to the regulatory sector, and how that then incorporates us, because the whole topic was robustness of the data and the models that the bank is making lending decisions about, this particular bank. And in some cases where we just don't have the level of satellite imagery or terrain data, we're actually in conversations about how we can joint fund PhD experts in certain universities to do very, very specific pieces of work. In this case, it's some of the satellite images can't tell exactly the difference between that peripheral flood layer that sits on top of roofs in Hong Kong and whether that really is as deep as the models are saying. It's really technical, really, really technical. Mm-hmm. Also, you don't know exactly down to which drain is blocked or whatnot, because you're making assumptions based on no drains blocked. Or that's the level of the interrogation of the models that's going on within the internal risk management and with the regulators in many of these cases. So we are then coming in with Fathom, this company I've talked to you about, and saying, okay, we got good models, but we might not be able to tell you if the drains are blocked. What about if we do something where we use imagery from public sources, YouTube, everything, and we just take as many snapshots of events when it's raining in Hong Kong in certain locations, and we analyze and deeply analyze those drainage systems and how they responded. Were they getting blocked or not? And we put a few PhDs to really get on top of that. There's some remarkable stuff that gets done to ensure that. And the fundamental issue here is, are we pricing things right? Are banks doing the right thing with the right data on managing their sustainability, but also supporting, the citizens of the location? So there's some really cool stuff that gets done, but I just say that that's very location specific, industry specific. I think what we see obviously on the lenders side is a lot of them getting better educated by actually acquiring a lot of the data and science themselves and then building that into their models. And so a lot of our data in some cases are actually consumed by many different sources. You mentioned about flood defenses. So one of our big sort of client base is actually the engineering and construction firms that work with governments, because they will go in and advise around governments and building flood programs or building defenses and all the rest. And what they need is the best of the science and best of the data. So they will acquire from different pockets. In our case, they might want our very sophisticated terrain data or the specific flood models. We feed that in. The client for us is an engineering consulting firm, but the ultimate user is actually a government in a certain location. So that robustness is really improving. I've given you an example, the Hong Kong example, but I think, I couldn't really sort of speak for the lender community more broadly, but from what I can see, this whole topic, as I said, around multiple data sources, interoperability of data, it's all that ecosystem is becoming more and more kind of robust. And what we need is the Public Safety Canada examples to get more of those where everyone in the ecosystem is benefiting from the data.
Right. Okay, looking forward, what are the tipping points and triggers that you're especially watching at Swiss Re?
I mean, I think for us, I guess, so there's obviously we have a view on and really strong around the topic of nat cat, which obviously has a link to climate. And what we've seen there is, and this is a trend that is very much playing out. In the past, a lot of the focus when it comes to understanding from a risk perspective and building models around that, a lot of the focus was what we would call primary perils. right? And this would include things like earthquakes, or tsunamis from earthquakes. What we've seen is such a significant increase in the loss development coming from what's deemed secondary perils. This would be things like post-event flooding, wildfires from heat. So incidents, hail, for example. So secondary incidents, natural catastrophe incidents have been on a massive increase. And because they weren't always the big focus, everyone's focusing on the Californian earthquake or the Japan earthquake as examples of major primary perils. The models have had to play sort of catch up and might not have been in development for many, many years. And these trends are happening. So when you see storm, hail, wildfire, you just need to go and read the news. You don't need to be an expert to see that there's a lot more of this going on and a lot higher sort of losses and a lot higher exposure. So one of the things we're looking very closely at is rapidly improving our understanding of secondary perils and bringing that data and insights into models that can be more robust and hopefully also get to the level that we've got with some of those much bigger concerns of the past around primary peak perils. So that's one theme. Robustness and sustainability for us is super critical. Obviously, if we've been around for 160 years as a company, we want to still be around for another 160. So something that we also spend a lot of time thinking about is exposure today and exposure in the future. And what you see we have short tail products that can effectively, you can know what the development of your exposure is in a short amount of time. But we also have liability products, for example, which are exposed over a long life cycle. So actually understanding things like the trends of courts on decision making around exposure to some of these risks is a super important consideration for us, because we can take a risk on today that we think has some exposure, but in 5-10 years time, it's a huge exposure because the courts have become, I don't know, more sympathetic to that topic. There's been some major incidents. They've manifested themselves in a much bigger way. We have many examples in our industry of things like asbestos in the past that suddenly become a major topic. And so what we do is not necessarily focus on this particular individual risk, but we take a bucket of risks and we run a lot of scenarios and we think about how these evolve over time, and then make sure that we call it our target liability exercise. We make sure that we really are balancing out and not sort of heavily concentrating ourselves in individual risk classes that can't be maybe offset by others. Of course, you get diversification through things like geographical diversification, product diversification, but this is really deeply trying to actually understand how climate and other things, trends are developing and how environments and governments would respond to that. And I say this because this is the interesting thing. We talked about financial services, but actually mining industry, as an example, think about these things. I had a conversation with a very large mining company the other day. It was the head of decarbonization for this company, and they're thinking, because you've got to think about supply chains, but in their case, they actually think about the demand chain, because they are right at the beginning of the source, the mineral that is the starting point, right? So what they got to think about is what are the trends that are going on in the future of lithium batteries, whatever it may be, the shifts towards more electric vehicles or sustainable energy sources and all the rest drives their type of product requirement of the future, and what is the long-term trends for them from a sustainability, target liability, product development perspective. So the drivers of any industry I see is, and big multinationals, they certainly get this, it's not restricted to those who are insuring or taking on risk or funding some of these exercises. There's across industries having to think, and the good thing is when we do see the awareness and the trends and the adaptation and the resilience being built, that's also impacting companies across manufacturing and natural resources organizations, because they've got to think about the demand side, not just the supply side. So a lot of sophistication around the topic with some deep expertise sitting in many industries who are really on top of the climate topic.
And it's also sitting in different parts of the company. And sometimes those different parts of the company don't necessarily speak to each other. So we sitting in the boardroom.
That's a big challenge. That's a big challenge.
Right. And it doesn't reach us at all. So that, this is brilliant knowledge is sitting in different locations in the company.
You
I
just got
was
to think
very
about those questions to ask, I think, is what's such a good question you asked earlier is what are the questions? I gave you an example, but that should be your robust starting point is why are we asking this question? Right now, we know that every board member, someone's going to say, what are we doing with AI? Do we see
yeah,
AI as a advantage or a disadvantage? Like there's some basic questions to ask. It's a hot topic. But
right.
if you're really going to actually as a board influence the AI topic, what you probably want to also ask is, are competitors using AI and are there user cases that are actually, successful in the deployment of it, or are we just spending money? So it's not just do we believe in X or Y, or it's a deeper set of questions that unlock whether the management of this organization and are really thinking about these and accessing the right experts, because you may not have those experts in house. And then to your point, silo, and some companies are very fragmented and decentralized. Those tends to be the ones where, as a board member, you've got to ask more pertinent questions around data information sharing and relevance of risk management. Often when it's very centralized, the management team has these questions themselves. They're on top of this and they're able to get the data. Decentralized, fragmented organizations can be a challenge.
That's right. I was very struck by your point about the political vagaries associated with what would be underlying physical trends. So we've been talking about, really staying on top of the evolving picture around, in particular, because this is the topic today, climate related severe events. But of course, there's a secondary layer on top of that is how are the politicians going to respond to this? And are they going to take actions that are going to actually thwart what it is that really we ought to be doing? And this I see particularly in respect of, the countervailing pressure of there isn't enough housing. Affordability of housing is turning out to be a massive political destabilizer. People are, turning to the political extremes out of frustration that they can't afford to pay the rent or pay the mortgage. And so that induces governments to loosen up on the environmental controls and the safety measures around ensuring that homes are going to be built safely. And therefore, our best efforts at managing the hard physical risks can be completely unwound because of political decisions that we may have failed to anticipate, because that's about modeling brains rather than modeling, physical trends.
It's obviously a very topical point and conversation. And, there's the underlying theme is there is impact that is visible, is measurable, that we need to be thinking about how does that impact our business, right? No matter where you're operating. So getting access to data and quality data is important. And in some cases, you're going to be able to get that data more favorably from public sources. In other cases, you've got to try and find that data from more private sources. And that situation is going to shift, and it's going to be, I guess, a moving target. But the underlying theme is you've got to, certainly if we're talking about organizations, which is our client base, and maybe I'm not talking about the ultimate individual who's buying a house, you've got to get access, but the same principle would apply. You've got to work with the constraints or opportunities that exist in your environment. And there are different players and different ways in getting access, but it starts with having that understanding, that data and that risk understanding. When you actually get to incentive schemes, support schemes, all of the rest, well, of course, we would encourage strong public-private partnerships and everyone, stepping in, and that's what we want to see as a general theme. But again, you're going to get different government views on this, and ultimately that represents the people of that country, and they're going to have individual views. So for us, what we really focus on is trying to get as accurate as we can data and build models and capabilities, and then let's look at the accessibility point. But I do know that environment changes, and at any point in time, that may be an opportunity or a risk more for the company, and that's what you got to take a decision as your organization operating there. And as individuals, it's the same challenge. And I think it's a little harder when you think about the individual getting access to. And so I've given a couple of examples on this call where it's working really well and people can get data and access, but these can be very complex topics. And so simplifying the whole topic of and simplifying the understanding of risk and how that manifests itself in terms of a buyer of a house or someone buying insurance needs to constantly improve. And I think that's a bit of a challenge. We've made this quite a complex thing, and a lot of times it's very technical people who are working on these topics and simplifying it, common understanding. But there's going to be gaps based on how we, what we see I guess the intentions of any local government are. I think that's just a reality we've got to work around.
Indeed. All right. Well, we're approaching the end of our time, and we have a couple questions. Good, because it was very thin before. So we've taken the first one, and we have. It appears many experts were involved in consultations and with authority. We'll be looking after who governs the experts. Okay,
that's a good one.
question.
Who governs the experts? Look, I think the fair question, who governs the experts. If so, again, let's put this back into the context of, I guess, mostly who's on the call here. If you're relying on a single source of information, single source of truth, then you should be quite concerned about who's governing that source of truth and what's the background. But what we see now is a move more towards getting a best common understanding and a view, and actually multiple models and multiple insights actually improves the understanding because you get a better result. It's that concept of take 1,000 times and you'll get the better mean than one version. That's not to say you need tons of data and tons of models, but actually that's the direction it's going in. And then that leans a little bit more towards, or less towards, who governs the experts. It's, are you doing a good job of governing yourself as an organization or as a business to get robust insights and to put your view on risk over the top. So I do think it really depends on how you consume insights and understanding. What I will say is there's lots of standards committees and institutions that are working on this topic, public and private sector, multilaterals, that, as I say, are hiring experts themselves to qualify and to stress test these models and this data. And it's that I see. It's that Hong Kong example that I gave you. That's where the governance and that's where the sort of expert testing is going on. I think we see it, for example, just to quickly touch on in something which we haven't talked about, parametric insurance. In its simplest form, this is quite a simple product. It's linked to an indice, an index, such as an earthquake index, and there's a trigger. You don't need to prove loss, so you can get immediate payout. It's a very useful alternative source of insurance cover for rehabilitation needs, because you can get funding very quickly and get back up on your feet, and you don't need that sort of proof of loss. But actually, when you see companies how they would model this, they would also look at scenarios. So they might not do a product for the first time the T10 happens or whatever the event is. They might pay out on the second and third. And so you can get quite complex in this. And I think actually who governs the experts should also not just be looked at like the data and the science of climate. It's really understanding how products are explained and how that manifests, how the data and climate is actually manifesting itself in products, and are these products understood? And that's where we've still got more to do as an industry.
How are the products understood, and are they inducing the right types of long-term focused decisions? This is always my
and
word.
that's something we need to keep working at in the industry.
Okay, we have 2 minutes for our final question.
Sure.
So this person is referring to significant data gaps in Southeast Asia, especially to the point you made earlier around localized climate impacts, infrastructure vulnerability, informal economies, obviously huge part of the economies, and considering the severity of climate impacts in the region, what more needs to be done for Swiss Re and your peers, he didn't say that, to enhance its risk modeling capabilities to address these blind spots? And what partnerships or innovations are key to closing these data deficits?
Important observation. And what I can say, one that we've actually engaged in conversation with, I would say, a combination of public and private sector in places like Singapore and others where institutions that are looking at this. We've gone as far as looking at protection gap and is there work that we could do within our Swiss Re Institute around this topic, which is many people would be familiar with Cigna reports, where we do a lot of deep analysis and understanding some of these issues. What we realize is a lot of our tools and capabilities, specifically in the area that I work with, risk data solutions, are really helpful to understand an individual risk or an individual asset risk. Actually, what we're talking about here is community risk, and where you don't have that sophistication and data and that understanding that the person who's asking the question clearly knows is a gap, that's quite hard to get into solutions mode. So I'm not sure exactly where we are on all those conversations, but what I can say is we are actively engaged with the right bodies within our company. That is a topic that we are looking at, and there's definitely a recognition from the governments on those gaps. So I would think that there will be a few players that are starting to really look at this more attentively. But I absolutely see where the question is coming from. There is a challenge there, and I hope to see us working on it with others as well.
Wonderful. Well, Jonathan, thank you very, very much. I think my key question coming out of this in my wrap up, but we've covered it multiple times, is what are the main takeaways for board directors? What should we be doing differently? And you've addressed that very thoroughly for us, which I think is immensely useful to our audience. So all I can say is thank you very much.
Thank you, Karina, and everyone else. Stay inquisitive on it, and that'll be a great starting point. But happy to also come back and engage and share with follow-ups as we see, and wish you all a great rest of your time together in conference.
Thank you. Thank you so much.
Thank you. Take care. Bye.
All right. Goodbye.